Hi everybody, welcome back to the last in a series of video lectures on Chapter 8. In this video lecture we'll talk about natural resources on pages 315 and 316 of your textbook. We'll also talk about intangible assets as shown on page 317 and 319 in your textbook. Let's start with natural resources. Natural resources are things that grow on the earth or are deposited underneath the earth. Typical natural resources that people harvest and sell or mine and sell would be timber, coal, oil, and ore. While plant assets are depreciated, natural resources are depleted. So when we calculate our depletion expense for our natural resource, we're going to debit depletion expense and credit accumulated depletion. Accumulated depletion is a contra asset account. It attaches itself to the natural resource asset that's recorded on the books and has the opposite normal balance. Accumulated depreciation therefore has a credit balance. The formula for calculating depletion expense is very similar to units of production. Cost minus salvage value divided by total units of capacity. Example, on March 14th, 20X1, Sampson Ore Company purchased land considered to be rich in iron ore for $1,700,000. It is expected that once all the ore is mined, the land will be worth $387,500. It is anticipated that Sampson will be able to extract 750,000 tons of ore from the land. Step 1. Calculate depletion expense per ton of ore. So we want cost minus salvage value divided by total units of capacity. You go ahead, do that calculation, then start the video again and check your answer. Our depletion expense in this example will be $1.75 per ton, calculated as the cost of $1,700,000 minus salvage value of $387,500 divided by total estimated units of capacity. Carrying the example a little further, in 20X1, Sampson mined and sold 95,000 tons of ore from the land. Calculate the amount of depletion expense and write the journal entry to record the depletion expense for 20X1. You go ahead and work this part of the problem. When you finish working the problem, start the video again and check your answer. Our depletion cost per ton of ore is $1.75. Sampson mined and sold 95,000 tons of the ore in 20X1, so depletion expense is $166,250, calculated as 95,000 tons times $1.75 per ton. Debit depletion expense, $166,250, credit accumulated depletion, $166,250. One thing that you need to keep in mind with depletion is that depletion expense relates to natural resources that was mined or extracted or cut and sold during the year. If some of the ore or timber was mined but not sold, then the depletion relates to the unsold ore has to be carried to the balance sheet as ore inventory. Let's work an example on that for a better explanation. Same as number 4 above, meaning that Sampson mined 95,000 tons of ore from the land, but they only sold 80,000 tons. That means that 15,000 tons were mined but not sold. So the depletion expense that relates to that 15,000 tons must be carried as an asset called ore inventory. Let's do some calculations. Applying the $1.75 per ton to this problem, Samson mined a full 95,000 tons of ore at $1.75. Accumulated depletion is going to equal $166,250. But they only sold 80,000 tons. So depletion expense is going to be 80,000 tons sold times $1.75 per ton for $140,000. And the inventory of ore is going to be the 15,000 tons of ore that they mined but did not sell times $1.75 will equal $26,250. So debit inventory of ore, debit depletion expense, credit accumulated depletion. Please pause your video, write that journal entry, and come back and check your answer. So here's the journal entry. Debit depletion expense, $140,000. Debit ore inventory, $26,250. And credit accumulated depletion, $166,250. Okay, let's go on to intangible assets. You can read about intangibles on pages 317 through 319 of your textbook. Intangibles are non-physical assets used in operations that give companies long-term rights, privileges, or competitive advantages. Examples of intangibles include patents, copyrights, licenses, franchises, goodwill, and trademarks. While plant assets are depreciated and natural resources are depleted, intangible assets that have limited lives are amortized. And when we record the journal entry, it's debit amortization expense and credit accumulated amortization. The following formula is used to calculate amortization expense. It is very similar to straight line depreciation, except there is never, ever, ever a salvage value associated with an intangible. Use this formula always when you're calculating amortization expense on an intangible. Cost divided by the shorter of the actual life or legal life. That's cost divided by the shorter of the actual estimated life or the legal life. The legal life of a patent is 20 years. The legal life of a copyright is the life of the creator plus 70 additional years. Now I'm going to give you kind of a tricky example. As you read this example, as we read it together, I want you to remember that the formula for calculating amortization expense is always, always, always cost divided by the shorter of the actual estimated life or its legal life. No other complications are involved. So let's read this example together. Then I'm going to ask you to pause your video, calculate amortization expense for X1, and prepare the adjusting journal entry to record amortization expense for 20X1. In this example, on January 1st, 20X1, Solstice Company acquired a patent on a process to make solar panels. They paid $50,750 for the patent and expect to use the patent for 12 years. They expect the patent to be good for the manufacture of 725,000 solar panels during the 12-year period. During 20X1, Solstice processed 9,450 solar panels under the patented process. Record amortization expense for 20X1. Please pause your video, calculate the amortization expense, and record the journal entry. So did you cut straight through to amortization expense, or did you get lost in a lot of the details here that absolutely did not apply to this problem whatsoever? Remember, always, 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 when you're calculating amortization expense, it's cost minus or divided by the shorter of the estimated actual life or the legal life. For a patent, the legal life is 20 years, and they're simply estimating a 12-year life, which is certainly shorter than 20. So the calculation is cost divided by 12. 50,750 divided by 12 is $4,229.16 per year. We did acquire the asset on January 1st, so it'll be a full 12 months amortization expense in the first year. And I didn't give any rounding instructions, so if you recorded it using 4229.16 or 17, that's totally fine. But I'm going to round to $4,229 in my solution. Debit amortization expense, credit accumulated amortization, $4,229, debit and credit. And that's all there is about amortization expense. The last intangible asset I'd like to talk about is goodwill. Goodwill is a special intangible asset. Goodwill is never recorded on the books unless an entire company or a business segment is purchased. So Corporation A purchases Corporation B. That's the only time you can get goodwill on the books. Corporation C acquires a segment, an entire segment of Corporation X. There may be goodwill included in that purchase of the other business or business segment. Goodwill is the amount by which the acquired company's value exceeds the value of its individual assets and liabilities. Goodwill does not have a determinable life. Therefore, it is never amortized. Remember up here I said that goodwill is amortized if it has a limited life. All of these intangibles, copyrights, licenses, franchises, trademarks, all have limited lives. Goodwill does not have a limited life. Therefore, you can't calculate amortization expense for goodwill. So do not amortize goodwill. Instead, goodwill is tested annually for impairment. Details on impairment tests are in advanced courses, and that's all we need to understand about goodwill for this class. Well, that's the end of the Chapter 8 video lectures. I'll see you next time in Chapter 9.